Hello, hello, everyone. We are back here, Mastiff Home Buyers, and our what used to be our Lunch and Learn is now our Empower Your Home Ownership top resources to navigate your journey. We know that home ownership definitely is a journey. So we are excited today to get to talk to Ron Ireland. Ron, can you hear me? Let me see. There you are.
Okay, can you hear me?
I can hear you.
Okay.
Great. So we're really lucky to have you here today, Ron. I
Thank you.
appreciate you giving us your time today. I know you're super busy out there running around helping homeowners. So
Yeah,
hopefully we'll be able to help some more through this live stream. And so why don't we just jump in and get started?
that sounds great. Let's do it.
All righty. So why don't you just do a little introduction about yourself? Give us your elevator speech, who you are, how long you've been doing this, anything you want us to know.
So, Ronald Ireland, and I'm in several different facets of real estate, but primarily financing. And but I have some other areas that I do also. I've been in the real estate game 42 years, long time, and right out of college, I went to work for Capital Federal Savings and Loan as a staff appraiser, and really that started my journey into this. Although I did grow up in a real estate family, my dad, and my uncle had a real estate company, so always kind of knew I'd be in the real estate game. Growing up and doing that, and so everything in school was kind of geared towards that. I actually have an associate's degree in architecture and then a degree in business, a degree in marketing, and a master's in finance. So, really have an extensive education background to be able to do what I do, and that's has served me well. So again, in a previous life, I was an appraiser. I had my own appraisal company. After 4 years at CapFed, I left and went out and started my own appraisal company. I loved being an appraiser. I would rather be an appraiser today, but unfortunately, there is no money in appraising today. And they've pretty well dummied it down where appraisers really aren't hardly appraising. In fact, as of January 1, I AI will start taking over appraising for Fannie Mae. So we'll see even less demand for
Wow.
appraisals. Yeah, as we go forward, a lot of people don't know that they'll actually have data takers. They're training data takers now, and they'll send data takers out. They gather data, come back in, put it in the computer, and the computer will actually value that. So I've also had my real estate license in this time. Besides my appraisal license, today I'm a licensed loan officer, as well as I do commercial loans. So I do loans for consumers, for homeowners, through Primary Residential Inc. And it's a great company, top 20 retail company in the country. And so they have all the products that I need to be able to do that. But then I also do commercial loans because I work with a lot of investors through my own company, RL Ireland and Associates. So really have a lot of different platforms. I also have a company that is working on a wholesale website, as a company that is doing software development for the real estate industry. And we're finding that this AI is really taking us into a new level out there, and being able to hopefully do things faster and more efficiently. And I know it will help my writing ability, and
Yeah.
I can. I mean, that's my. I'm the slowest typist in the world, so to have it all typed up, and I just got to go back in and clean it up. I'm excited about that.
Right. No, that's awesome. So you shared a little bit about kind of your background and how you got to where you are. Um, but tell me today, why do you do what you do?
Well, so I help a lot of homeowners. So my areas of expertise are investors. I work with a ton of investors, helping them find properties, buying properties,
Mhm.
so that they can provide. I love it. I have a network group every Tuesday, and in there, as we go around the room, instead of landlords today, most of those people are, when they ask what they do, they go, "I'm a housing provider." I love that because that's exactly what they're doing. So I'm helping people go out, find property so they can provide housing for young families out there. Instead of having to live in that apartment, they're able to live in a house or maybe a duplex, and giving them, maybe they get to have a dog because of that. So
Mhm.
really have more of a family out there to be able to help them. Um, that's what I tell people. Little sideline here. Tell people. So I have. I tell people I have 10 children. I actually have 5 children, but they're all married. So I've they're all my children, right? And then I have 11 grandchildren. So people ask me every day why I haven't retired, and I'm going. I want to make sure I'm there for my children or my grandchildren. And I could retire, but I want to make sure that I have the means to be able to help them if they want. So in that, I do a specialty loan that I had mentioned earlier, that I make a huge difference in families' lives, and I have over the years. I started doing these in '06 and kind of got into these, and these are called renovation loans. And there's a lot of different kinds of renovation loans. And if you go on my social medias, you'll find me as the renovation guy. And so I have that extensive construction background. I understand. I have flipped homes myself. I've been a landlord. As of '96, I owned a lot of property, and continued to be a landlord through about 16, and then sold off most of my property. Most of that I put to good use in sending all my children to college. So I got all my children educated, and that was a huge benefit to me. But these renovation loans, I had no idea what difference they would make, because what happened is '08, there were there's thousands, hundreds of thousands of foreclosures, right? And if you were a first time home buyer, right, and you wanted to buy a foreclosure, I was the only way you could do it, because you had to have renovation money to be able
Right.
to find to be able to buy that foreclosure, to fix it up, to be able to move into it. And
Mhm.
so I made a huge difference back then on helping people, get in a home, and buy it at the right price. So these people back then were buying it for a dime on the dollar. And so they were moving into houses, even though the cost of houses were going down, then they were able to move into a house with instant equity, right? I would say over the 16 years I've been doing renovation loans, that on the average, my customers are moving into a house with $40,000 in equity. So a huge difference that I've made in a family's life, instead of having to, essentially overpay for a house today when you go
Mhm.
out and it's listed for 300 and you got to pay 330 for it to be able to get into it. Yeah. My people are moving in with that equity up front. In doing that, it hasn't been unusual for me for a family to move into a house with $120,000 in equity, because they've gone out and picked up the house for a great price. And then, taking that, I do vet everybody, and sometimes they go, I don't want to do this. I would say 80 to 90% of the people who come to me with the idea of the renovation loan. And they've heard, hey, you need to go out, buy a house, fix it up, get a little renovation. My first house, I did that, right? And it was great. So I I set them down and tell them how much it is. It's a tremendous amount of work. As you know, you've rehabbed homes. It's a tremendous amount of work. And even if you hire a contractor, you have to manage that contractor and what's going on and keep on
Mhm.
top of it. and make sure that that's all coming together like you want. And so I set them down and tell them that, and they go, we're busy people. We don't want to do all that. And I go, not a problem. Got you pre-qualified, go out and buy a house, FHA, conventional, however you want. And so really that's how I do my marketing, is through, putting the word out there that
Mhm.
I'm the renovation guy. If you think you want to do a renovation loan, or do you want to talk to me about what that's going to look like, or if you don't mind, I tell people during that 3 to 6 months you're fixing that house up, just depending on how much work it is, it's like taking on a second job. And I tell them this, and I go, but if you have time to take on another job during this period, the who, and that's why I ask when I'm in my networking group, who would like a second job, they can work 3 or 6 months and make another 40 or $50,000. Pretty good, right?
Yeah.
That's a pretty good return on that. You're not going to be able to get, most second jobs are going to pay that. So when I put it in that context, a lot of people really go, "Wow, this is great. We think we want to do it." And I said, "I'm going to help you through this with every step." So I've helped hundreds, maybe 1,000 over those 16 years, people in helping them through the process into buying the house, and getting the bids, getting the contractors, getting it fixed up, and then finally eventually moving into that.
Cool. So you'll help them with all of those pieces, um, of getting the loan, getting the contractors in place, and if they don't feel comfortable, you're able to help them along with that process?
I am. So I have, because I am the renovation guy, right? I have a lot of investors out there that I help
Right.
through this same process, and I have money for them and get money for them. And so I have a lot of contractors that I can call on. So I mean, it could be like they will allow you to subcontract it if you want. There's some limitations on that, but if you actually want to go out and do a little bit more work, they'll allow you to be the contractor and subcontract the work, and you can save a little bit of money by doing that, right? But if time is of the essence for you, then I'm going to say, hey, go get a contractor, let him handle all that, and then you can just answer his questions. So I'm going to help you through the loan, through the whole process.
Mhm.
Now, something that I do that a lot of loan officers don't do, especially loan officers who've never done one of these loans. In fact, there's probably only a handful of loan officers in Kansas City who've done them on a regular basis and really understand that. So once you close on the loan, right, they take the money from that, and they're gonna pay the money for the house you're buying, right? So it's your house right away, okay? But then they're gonna take all the money from the work you're going to do, and they're going to put that in an escrow account to be drawn off on by the contractor. So they're going to do draws to the contractor as he performs work. And so we tell the contractor up front, this is how this is going to work. You're going to be going on draws. Now, sometimes I can get them some money up front for materials to kind of get them started and that sort of thing. But it's kind of like you and me, I have to close a loan. Then later I get paid on it. Same with the contractors, same with realtors. They do the work and then they get paid on it. It's contractors,
Mhm.
really, I tell a lot of people, contractors, you need to handle in the same way. A lot of contractors want money up front. And if you want to give them some money up front for materials, I understand that, kind of get them going. But just like everybody else, they need to get paid after the work has been completed. So I have things that I show them that they need to do. Don't pay the contractor unless he's done the work. And I'm going to help them with the loan. I'm going to help them through the loan process, through the approval process. But then I take it even a step farther. Once we close, I can step away. I could, I'm done. I can step away, but I don't. I always like make sure that I keep in contact with them and make sure the job's actually finished, making sure they don't have any problems with that. So that's one reason that I've been able to do this long term, is that I try and go beyond that to make sure that the project's finished and that there's no problems. I've had ones come back and they get into it with the contractor. I mean, it happens, and
Mhm.
so I have to go back in and maybe negotiate with the contractor to come back in and finish it. Or sometimes they decide, hey, we're just going to fire this guy, fire him, help them get a new contractor, get everything in place, and get them going again. And I'm going to help them do that.
Yeah. Well, that's great. Um, so are there requirements so when they get these construction loans, is there a scope of work that they have that identifies how much money they're going to need, and then they have to follow through with that scope of work? What are the requirements there?
That great question. So exactly. So we're going to have a hard, what they call a hard bid from the contractor, right? It can't be, well, it might be 10 or $20,000. It
Yeah.
has to be 14,950 or whatever the bid
Yeah.
is. And then that's what we're going to loan against. So we already know what the price of home they're buying is, right? And so we have to have a
Right.
hard bid so we can have a loan amount to go with that to put together how much the total loan amount is going to be. So the great
Right.
part about this is one loan. So it's not two loans. You don't have a first and a second. We put this all together in one loan, right, at a low interest rate, right? So for these loans, the interest rate is usually a tick higher than regular loans, maybe 1/4%, something like that. But even though you have to pay a slightly higher interest rate, it's well worth it in that you're going to get the home you want. Number one, that's a
Mhm.
big thing that I show is that people, maybe you found that house, it's in that perfect neighborhood you've been wanting, right? And the style of the home is great. It's going to work for you, for you and your family, but it's not a very good condition. Maybe it's an estate or divorce
Mhm.
situation and it could
Yeah.
use some work. And so I'm going to give you the money to fix that home up to be not just a house, but that's going to be your home. It's going to be fixed up with the
Right.
decorations you want, with how you want it configured, maybe, or how you
Mhm.
want it heated and cooled, or a lot of different things like that. A lot of people don't know that both FHA and Fannie and Freddie, I have loans that I can give additional monies for energy efficient items. Everything from higher energy furnaces and air conditioners to actually solar. I can give a loan for out there to really help cut down your energy bills. That's something I do. I'm really cognizant of my own personal how much energy I use. In fact, in my budget, energy for me is energy from my house, right? Energy from my cars, right? How much gas, and believe it or not, I have an electric car, so that helps a lot. And then energy for me, my food, and
Mhm.
mine right now, even with inflation. Now it's just the wife and I now, but I'm able to keep all my energy needs under $700 a month. So, that's something that I show people how to do, how they can, save energy and really live in a more efficient home to be able to cut down on that overall house payment that they're going to be making.
Right. Right. Absolutely. Um, so how how do what kinds of product are there different kinds of products available, or is it just kind of one thing? Do people have
No,
stuff
and
that
good
they have to
question.
choose
Okay,
from?
so there is. So FHA has a great product. I really like FHA's product the best, and the reason is because they don't limit you on how much you can spend on renovations. So if you found a house for $50,000, but it's a wreck, maybe it needs foundation and
Mhm.
completely gutted and new roof and everything, right? But you know that if I lend you another 150 on that, so you buy it for 50, another 150 in that, right? So you've got 200 in it, but that house could easily be worth 300 when you get done. That would be worth
Yeah.
it. That's a lot of work. I don't tell everybody to take on a project like that because that's a lot of work, but you're going to get huge equity out of like that, and you're going to get the home you want, right? So
Right.
that's huge. Not only is it a financial benefit, but it's an emotional benefit in that you come home and it's like, wow, I did this. I
Mhm.
helped put this together and created this, and it's really what you dreamed of on how to do that. So I have young guys who kind of do this, right? Um, and girls. So, maybe they're single or they're just, newly married. They go buy that house, they fix it up, they live in it a year, sell it, and then
Mhm.
on to the next one. And then they do it again,
Yeah.
just a little bit bigger house. I've had several couples that I've had now, when the kids start coming along, they're like, well, we probably need a more permanent house, right? So after three or four, but then they have the equity,
Yeah.
they're able to put that 20 or 30% down, and get that best rate and terms on buying the house that they want for their family. So it's a great way to gain equity. Somebody put out there yesterday, uh, hey, is buying a house an investment? I've always said it is. It's your first and best investment. You have to have a place to live, and so you can go rent. But for me, my first house, I bought it, fixed it up, and sold it. Had enough equity to buy a bigger house, right? And I
Mhm.
continued to accumulate assets by doing that. And so this is a great way to continue to buy assets. Now, you can also do these as a conventional. So if you have really high credit score, you're going to get a little bit better rate by doing it as a conventional, but there are limitations on that, in that you can only borrow 75% of whatever the cost is, right? And so let's say you pay 200 for it, you're only going to be able to put another 150 in that house to fix it up. So there's some limitations on the conventional, but there's a lot of other benefits. In other words, if you're buying a house and it doesn't need a lot of work, a lot of time it makes sense to do this as a conventional product, right? Now, the FHA product, um, it's 3.5% down, right? But if
Mhm.
you're a first time home buyer, right, the conventional product is only 3% down. So here, who would like to put 3% down, on a $300,000 house and move in with $50,000 in equity? You know,
Mhm.
it's a huge windfall, and this is something that I preach all the time in helping people understand that, hey, if you're willing to go through 3 months, 6 months of a little heartache to put this together,
Mhm.
there's a huge upside on, you're going to get to that house of your dreams a lot faster by doing this a couple times, rather than buying that house, you've had to overpay on it. And really, people aren't overpaying for a house because, you know, by the time they pay 330 for that $300,000 house, but 3 months down the road when they, or a month down the road when they move in, it's already worth 330. So they're not, I don't want to say overpaying, but they're paying top of the market for those homes out there. Now
Yeah.
there are they're all, we're also able to do this on. I've had investors do this too, on duplexes and triplexes and fourplexes.
Okay.
And so recently, Fannie Mae revised that, where you were able to do that as a homeowner. Before, it was only FHA would be able to do that, but now, as you have to live there, right, as a
Mhm.
homeowner to get in
Yeah.
for 5%. But you can go out and buy a multifamily with only 5% down. You live in that for a year, right? Then you move on to the next one. 2 or 3 times, you do that 2 or 3 times, you can have,
Mhm.
3 or 4 multifamily properties and be producing quite a quite a uh,
Portfolio.
yeah, yeah, with
Yeah.
an unbelievable cash flow, right? So,
Yeah.
who here would like, at 30 and you have a cash flow of 10,000 a month coming in, right? And that could happen.
Yeah.
You could actually do that by doing that.
Yeah. Absolutely. So what kinds of so do the qualifications of the person, you're looking at them as an individual and that you're doing the same kind of qualifications on them as you would for any kind of loan.
So any loan. So as a homeowner today, you have to fully qualify for a home. I mean,
Mhm.
there are bank statement programs, but you're still having to show income, right? And so on the investor
Mhm.
side, there are loans where you don't have to show income. But on the owner occupied loans today, because of Dodd Frank, you have to fully qualify in one way or another for all the loans. And so the
Mhm.
renovation loans are all the same way. You have to fully qualify. You have to show income for those. to be able to do that, right? But they work exactly as an FHA or a conventional loan would do. Is this the qualifications are exactly the same, right? So if you can qualify for an FHA you really is fairly easy to qualify for. I can actually go down to a 500 credit score to qualify for an FHA, right? And so, but with under 580, you have to put 10% down. So a little
Mhm.
caveat there. But
Yeah.
580 and above, you're able to get in one of these properties and qualify just the same. FHA allows a higher DTI, so that debt to income, how much total debt you have, to that income you have and how you qualify for that, right? And so we're able to get a lot of people in these homes with not a lot of income. They're thinking they have to make $100,000 a year, and I get a lot of people in these FHA homes with 30, 40, $50,000 a year in income.
Mhm. Yeah, well, that's great. And I'm assuming that the whole loan, so the mortgage part, or what would typically be your payment, for the house, the price of the house, plus your renovation loan is all wrapped up into one payment statement or mortgage statement?
Correct. So that's again, all these renovation loans are the same in that you're you have one loan, you have one payment, so you're not looking at a first and a second. You're able to just make one payment, so it actually makes it easier to qualify because you're not trying to qualify for two different loans. You're only
Mhm,
qualifying for one loan. Now a lot of times I have people, especially with interest rates a little bit higher today, I've had people, I've gotten into homes using that FHA 203K, and their interest rate's a little bit higher, but they're moving into that house with equity, right? And so let's say that
mhm,
next year this time interest rates come down a little bit, they'll be able to refinance into a conventional loan, right? And
mhm,
probably eliminate any mortgage insurance that they were incurred because they have that. So not only are they going to lower their payment because interest rates a little lower, but they're going to dramatically lower their payment because now they don't have that mortgage insurance. I've helped a lot of people with exactly that, in that they go in, fix them up, but they have equity. So a year later, we refinance them into a conventional loan, get them out of the mortgage insurance, and a lot of times into a lower payment.
okay. So do folks, when they're renovating them, do they have to have a special type of insurance on them during that renovation phase?
No, actually, we require that they have regular insurance. So whatever, and so
Okay,
instead of having to incur, you know, as an investor, you have to go in and you have to have special insurance, that
right.
construction insurance, and but no, we require that they have regular insurance on these, and that be put in place from day one. So it's cheaper, and they'll just keep that same policy once the property is finished.
Mhm. Okay. Well, that's great. That's actually a nice thing.
Yeah, it
Um,
is. No, I have run into a couple. There are a couple companies out there that won't insure them under these circumstances. But really, I know of a lot of insurers who will insure them under these circumstances.
mhm,
So it usually is not a problem.
cool. So who would you say is a great candidate for this kind of loan?
Well, today, the perfect candidate, anybody can do that. And I'll kind of go into that, but the perfect candidate today is your first time home buyer. You know, I mean, maybe, the husband has a little bit of construction background, and so he's not afraid of a project like this. Or maybe, somebody in his family understands construction a little bit, this that can
Mhm,
kind of help advise him about this. So for a first time home buyer, this is the perfect loan. It is a lot of work, and I tell him that. And some families don't want to have to go through that. I understand. But
right.
to be able to move into a home, with equity. My first home I bought it right. And then I went in and took my own money and worked on it. It was livable, but it just needed that upgrading.
Yeah.
It needed new carpet and paint, new furnace, that sort of thing. And I was able to, you know, do that over the first 4 years I lived there. But I sold it. I sold it for, I think, 40% more than what I bought it for. Well, that was my down payment to put 20% down on my next house out there. And so that same sort of thing, that's going to help propel that family into getting into the home they've always wanted sooner, right?
Right.
Or or being able to, in the long term, have equity in a home that they can send their kids to college, right? So equity that maybe they get to retire early, you know so
Right.
really, so that's the first class that I would tell people to do that. But an area where I've seen a lot of people come to me and I revise this are people that have never owned a home. And I run into these people. They've been renters all their life, and now they're 55, maybe 60, and they'd like rents are crazy today, right? And so
Mhm.
the rents continue to go up, and they'd like to lock in long term a housing. Now that's the great part about the American dream. Once you buy a house, you're locking in that payment you're going to make for 30 years, right? So that's the great part about it. Now, it may go up a little bit because of taxes, especially if you live in Jackson County. Yeah? And then, yeah, and your insurance may go up a little bit, but not a lot,
Mhm.
not to the degree that rents are going to go up. So that's the
Right.
second class that I see a lot of people in, that really 50 and over who decided, hey, it's time we bought a house. And this is the perfect way for them to do that, to get the home they want. This is probably the last home they're going to have. And so they're going to be able to move into that home, get the home they want, decorate it, have it done like they want, configured like they want, and they know, really what they have. And by putting that money in up front, that reduces their amount of ongoing maintenance they're going to have. They move into that house with a new furnace. They know that they're going to get 10 or 20 years out of that furnace, to be, they don't have to replace that in a few years and take the money. So, you're borrowing that money to be able to make sure the roof's in good shape, and your
Mhm.
HVAC and your electrical are in good shape, that you have newer carpet, it's all painted, and your plumbing's all new. You have all the new faucets and
Right.
electrical gadgets out there, to be able to not have to spend. And everybody knows that owns a homes, houses can be a money pit. Back to that, back to
Yeah.
that movie they had, the money pit. And they
Yep.
are, houses are an ongoing thing. But by putting all those and making everything new, when you move in, you dramatically reduce that maintenance. So somebody that, hey, I'd like to retire in 5 or 10 years, and maybe they've been renters, this is the perfect way for them to
Right.
get in that house and know that they're going to be able to stay in that house long term and control all of their costs for that.
Yeah. Yeah. Um, so I assume that, most of them are, like, livable situations where they can go in and they can do the construction while they're living there, or do they have to renovate the house before they move in as owner occupants?
So, great question, right? We actually allow them 6 months to move in, right? Now, most of them, I'm going to say most of them, they're able to, get the inside done. It's mostly cosmetic, get the inside done within 60 days, and they're moving in in 60 days, right? And
Mhm.
so that's kind of the requirement. They need to move in 60 days unless they have gone with a special plan we have. We're able to actually take their payment, right, and put
Mhm.
their payment on hold for 6 months while they get that house livable so that they can move in, right?
Okay. Yeah.
So they're not having to make double payments living
Yep.
somewhere else or living with mom and dad. They're able to
Right.
put those payments on hold while they get it livable enough, right, to move in. And they can do that 3 months, 6 months, however long they want, up to 6 months, and really get that house ready for them to move in.
Mhm.
So sometimes, like the house I talked about with, buying for 50 and you're going to put 150,000, that was the case. We had to put all his payments on hold for 6 months so that he could get this, because there was foundation damage. There was, a lot of
Right.
work on this, that they had to really get this house ready. So that's a great part
Mhm.
about these loans, is we're able to work with the borrower and the new homeowner on getting him in a reasonable
Right.
amount of time. Yeah.
Right, and I'm sure that would be a question most people would have is, "Where am I gonna live while these renovations, are happening?" And in some cases, you can live in a house that's, going through renovations. People
Yeah,
do it all the time. They
they do.
renovate their kitchen, they,
Right.
renovate a bathroom, but, in this case, if they are, it's great to hear that they don't have to pay double in rent or move with family or whatever, that those payments can be deterred until, for however long. Is 6 months the most that you can do that,
It
or is
is.
it
We
depending
can
on the
we
scope
can
of work?
ask for exceptions, but the rule is 6 months. So we can, if it's a huge project, we can, and really
Yeah.
we don't run into that on the FHAs, because the FHAs has a limit on how big of a house that you can buy. So there's a dollar limit, and so, but we do run into this sometimes on the conventional, where there's a bigger, so on conventionals, the new conventional loan
Mhm.
limit is going to 750. And so, yeah, you're buying a house for, and I've seen that, they buy a house for 300 and they put 200 in it, but when they get all done, it's worth 750. And
Mhm.
so with the conventionals, we can get a longer period. We have to ask for the exception, and the underwriter's going to look at that and say, yeah, this should work, and we understand why they need a longer. So we can ask for that exceptions in some circumstances.
Okay. So, is this kind of product available in a refinance or only for new purchases?
Great question. Absolutely. I do refinance. I'm doing a refinance one-on-one right now. They actually bought this as a contract for deed, right? And so I'm able to refi not only out of that contract for deed, but I'm giving them additional monies to finish the basement, right?
Mhm.
And so again, they're going to pick up uh, equity by doing this. So they bought the house contract we did a couple of years ago, and now they want to finish the basement. They got some kids, and they want to have some rec rooms and things like that.
Mhm.
And so this has been a great product for them to be able to use as a refinance, right? So another area of refinance, kind of back to that, homeowner that's been in that house 20 or 30 years and it needs renovated, right? And well, they don't
Mhm.
want to dip into their 401k, or they don't want to, have to, go borrow the money short term, because putting it on credit cards gets expensive, especially today. And
Right.
so we're able to, again, pay off their first mortgage, right? And then give them all that additional money they need for that renovation in a refinance to do that. So they're not having to do a cash out. And so rather than on a cash out today, you can't take a cash out more than 80%. But if they're looking for the money to renovate, we can do one of these renovation loans and actually loan them up to 98% of what it appraises for. And so FHA allows you to borrow 98% on a renovation if it's a rate and term. And so these are considered rate and term loans, right? And so we're able to really, there hasn't been a big problem today with appraisals and that things, because values continue to go up. But let's say in 12, 13, 14, and 15, it was hard to get an appraisal up higher. A lot of people wanted to cash out, but weren't able to get that. So I was busy doing renovation loans in that period, right? as refinances because I was able to get them a higher um, LTV to give them the money they need to be able to renovate that home. And once they do that, then the home was worth more money. And so that was the only way that they could really tap into equity, is to really fix it up so it's worth more money. A lot of times the banks will come out and they go, well, your house is only worth 100 and you owe 80, and when you want to borrow another 20, we can't do that, right? But I could do that because when they got done, the house is going to be worth 130 or 140, right? And I'm able to give them those additional dollars they want, and still in a low interest rate loan, right? To be able to really fix up the house how they want it, and get all the new features, like I said, to be able to move into that house.
Is this able to be done on a foreclosure house?
Great question. So I did so many of these in 08, 09, and 10. I was the busiest guy in town because, as I had said before, if you wanted to buy a foreclosure and you're a first time home buyer, this was the only way you can do it. And I've
Yeah.
had several people go out, and we're coming back into that era where we're going to see, not a lot of foreclosures like we did before, but there's going to be more foreclosures than there are now, right? And so this will be a perfect time for, a young couple to pick up that foreclosure, right? And fix it up. And if they want to buy a foreclosure, this is the only way they can do it, because you can't, a lot of times those foreclosures aren't where you can move into them. They're not livable, you know. And so all lenders out there have a standard that if the house isn't at least in average condition, that they're not going to do a loan on it. And this all comes out of 08, right? And so the only way to move into a house that isn't at least in average condition, fair condition, is to get the additional monies to go with it, with the renovation loan, so they can do this. So this is a great way that we'll see in the next couple of years for homeowners to be able to buy that foreclosure and get a great deal on it and fix it up, and again move in with gate equity. I've had people that have bought foreclosures and then fixed them up, and I've had them move into it with $100,000 in equity.
Awesome.
Yeah.
And these, because they're FHA products, I assume they're available across the nation, not just here.
They are. So really, I talk to everybody about that. There is only a handful of lenders in Kansas City that know how to do these.
Right.
Most lending companies have this type of loan available, but they probably don't have somebody who is experienced in this in these
Mhm.
kind of loans, right? And so really that's what I encourage everybody, is find out what experience level is. This is the first one they've ever done? Have they done one in the next couple of years? Do they know a lot of contractors? Do they have a construction background and understand how that works? So I encourage all of them to talk to that loan officer. Yeah, sure, he says, oh, I can do these loans, but I get pushback from realtors who've tried to do these loans with somebody who didn't know how to do them, and they messed them up, right? And so they
Yeah.
come to me and they go, well, I'm never doing another renovation loan. Well, because you used a loan officer who didn't know what they were doing. And
Yeah.
so really it's helping them through that and understanding, and really vetting the borrower and getting to understand, what kind of situation they're moving into. Like I say, I have people I sit down and tell them what they're looking at, going forward on this, and they're going, yeah, I don't, too much work for me. I'm going, not a problem, right?
Mhm. Yeah. So, and for the back to the qualification question, so a person who doesn't have a W-2 income, can still qualify, just similar to what they would for a normal house?
Absolutely. So I help lots of self-employed borrowers, right, with getting qualified, right?
Mhm.
And so I had a gentleman come to me this year, and he hadn't filed his 22 taxes yet, and he wanted to do one of these kind of loans, and I let him know, hey, you being self-employed, you can kind of determine what deductions you want to take and what you don't, right? So if you write everything off, you may not qualify. But if you show a little income, and a lot of times it isn't a lot of income, right? If you show a little bit of income, then you're going to be able to qualify for this, right? To
Right.
be able to really move your family forward and get a great house, right? You may have to pay a little bit more in taxes. Maybe you have to make payments to the IRS, but that's more than worth it in trying to buy a home, because on the other side, you're going to pick up equity to be able to know that you can tap into that equity if you need it.
Mhm. So are there any restrictions as it relates to location or areas, I mean, could somebody say, "I really wanna live in the inner city," and go buy a house on one of these construction loans and live there?
I encourage people to do that, and
Okay.
I do. It's a lot of times, sometimes the only way you can do it because of the condition of the homes, and so to be able to go down there and maybe pick up a house for, I'm seeing houses in the middle of the city sell for 150, maybe 200, right? And a lot
Mhm.
of people are having to buy houses in these areas because of the price of the homes in the suburbs have just gotten crazy.
Right,
That's all they qualify for. So this is
right.
a way that you could go down and do that. So whether it's in the inner city, whether it's in rural, whether
Rural, that was gonna be my next question.
yeah, so you can do these loans anywhere, anywhere. You can do
Okay,
these loans you can do these loans in a flood zone. I can show you how to do these in a flood zone, and maybe you have to put the house in a situation, or maybe build some walls. Get the money to really
right.
preclude that from flooding in the future. Yeah.
Yeah. Yeah, well, that was yeah, I was thinking about the rural areas because somebody had told me here recently, and I have not investigated this, and they were talking about DSCR loans.
Sure.
I know that's not the topic that we're on, but they were saying that sometimes it's more difficult to refinance in a DSCR loan in a rural area because they have some no rural.
It is. It is. They do have some rules about, the populations and depending on the
Mhm.
lenders. And I have
Yeah,
lenders who will do those in areas like that. But that's the great part about these is there's no restrictions. So I've helped a lot of people, and maybe they want to buy that house on 10 acres, and they go out and look at it, and the septic system is not working any currently,
yeah.
or the water, maybe it doesn't have water, and the lender's requiring that the house have water. I can give the
Mhm.
money to repair the septic system. I can give them money to bring water to the house. I can give them money to do any of the improvements. And, as long as there's other comps in the area of similar type 10 or 20 or, 40 acres,
Mhm.
of comps, then that's all FHA requires, that there are comps in the area of similar type acreages.
Okay. So what about if they wanted to build? So I looked at a property recently and it was out in Harrisonville area or Peculiar, I can't remember, and it was 10 acres and it had this tiny little two-bedroom farmhouse on it. That was pretty old. I mean, probably from the 30s or 40s. I mean, it wasn't an old 1900s house, but I mean, it was pretty old. And I thought about that and thought, I don't know if I would want to purchase that and renovate that house versus tear it down and build something new. Is that possible?
So that you can take that house and you can put an addition onto that house and use the
Okay.
renovation loan into doing that. So you can
Okay.
make this a much bigger house by doing this. Or
Okay.
now, being the construction loan that I am, I'm also able to do a new construction loan. Okay. And so
Okay.
I can do this as an FHA. If you wanted to go buy that 10 acres, right, and put up a brand new home, tear down that old home, or have it hauled
Mhm.
off or something, right? And
Yeah.
build a new home. I'm able to do that as an FHA, right? Or a conventional with minimum down on that. that you can go out, and these are called one-time close loans, right? And so you qualify for these up front. The first 6 months or a year, depending on how big a house it is, of this is your construction loan, but that automatically converts into a permanent 30-year fixed loans when you get done with that. So I'm able to do this as a new construction. Now, these aren't renovation loans, obviously, but these are new construction loans that I also do. So I
Mhm.
try and if
Okay.
it's construction, really, I try and have that product available out there to anybody.
Yeah. Well, that's great. Um, well, I'm like running out of questions, but is there anything that I missed that you think people need to know about this product being available? Um,
Again, the biggest thing that I reiterate, I'm gonna help put you in a position to be able to do this. So even though maybe you come to me and you're not quite qualified, even though with FHA, I can get most people qualified, right? Uh, then
mhm,
I'm going to be able to put you in a position, right, to be able to do that. So you can. That's the great part of FHA is you can have a parent, or any relative, they can co-sign for you, right? So if you need a co-signer for a year while you get it done, and then we refinance it into a conventional later and lower your
mhm,
payment, that works. So really, I'm able to help almost anybody, you know, get into a home like this with equity, right?
mhm,
From day one, and to make sure and do these. So you kind of see I'm a little passionate about these because I have made a huge difference in a lot of
yeah,
families' lives and how they do that. And so really that's kind of fun for me is, people come back to me and thank me years later for, really helping them,
yeah,
put their family into a new place and a new life out there for them to do. If it's construction, I'm going
mhm,
to do it. Whether you're an investor or a homeowner or anything, I do tons of the DSCR loans, and so I'm able to do DSCR loans down to 620, which a lot of people can't. I'm able to get a lot of investors into investing with very little down. I have ways for them to get into investing with a little as 10% for, so not very much money, right? And then we get them in there, get it fixed up, and then again we
mhm,
refinance them into these one of these DSCR loans, and they really don't have to show any income. So, if you're self-employed and you really seriously don't have any income, I'm able to get a lot of people investing into real estate, right?
mhm.
And the same with if you have a business, we can do a lot of different products like bank statement and asset depletion loans and and loans to really
Yeah,
help them be able to be. So I have not only helped a lot of homeowners, I helped a lot of investors. I'm actually pretty busy right now between
good.
renovation. Yeah, I am.
That's good.
And is where most I heard a, a statistic this morning, right, that over half of the loan officers that were loan officers in 21 are gone. They've let their
Mhm,
licenses go, and they so we have to get relicensed every year, and they expect after the licensing period ends, this new licensing period
mhm,
ends the 31st and starts January 1. They expect half of them to be gone again. So they expect next year there only be a quarter of the loan officers that were loan officers in 21 being a loan officer going forward. Right.
yeah,
I know the realtors are going through the same thing. They're, a lot less. So really,
yeah,
the great thing about my business is I've made myself recession proof. So I don't get super, super busy like the guys who do all the refinances like they did in 20 and 21, right? I don't get
mm,
super busy. I stay busy. And I had a good 20 and 21. I did. But because of all the different kinds of investor and renovation loans I do, I don't get slow. So I've kept
mhm,
busy, and I've had, in fact, I've lately I've had so many calls from competitors want me to go to work from them because they're looking at everybody's numbers, and my numbers weren't huge numbers in 20 and 21, although I made good money. you know they're uh, they're calling me because I'm the only one that has consistent numbers. So I'm one of the most consistent loan officers out there, and I like my book of business because it's consistent. I know that I'm not going to make millions, but I'm in any particular year. I know loan officers in 21 who made $1 million, and
Mhm.
that's crazy. And but I don't see the slow periods like a lot of other loan officers do.
Yeah. Yeah. Well, and I think, well, maybe this is a little off topic too.
Yeah,
I don't
yeah.
know, but this is an issue that I think somewhere along the line we're all going to have to come together to solve. This is
Okay.
um, older people wanting to downsize and being able to um, have a payment that they can afford in
So
retirement
so I am
and
I
or
and I'm about to start a so not to cut you off, I'm sorry, but
that's
I
okay.
this is something I'm about to put a seminar on, and I've already got answers for all of that, believe it or not.
Oh, great.
Yeah, and one of these answers is something I'm personally looking to do. Like I'm in a, the kids are all gone. I'm in a house I don't need it anymore. It's
Mhm.
too big, and I'd love to cut down my
Yeah,
energy needs, right? And so I
yeah,
have I have unbelievable answers for those people who need to get out of that house they don't want anymore, right? And get into something smaller, or I have other different alternatives because I'm at that age right now, and I'm looking for alternatives, and I've come up with some unbelievable alternatives. So this is something that we could go into on another time.
mhm.
Is I could walk you through that whole seminar on how the thought processes, and how and where a person want to go with that.
Yeah, absolutely, and I would love to talk more about that because it seems to be something that comes up, as, we have these discussions about housing and affordable housing and home ownership and the baby boomers and I mean all of this and so many people are in that situation where
Yes.
they're in their house and they're like, I paid it off and I'm not going to go pay $1,500 worth of rent. And they don't want to move to a bad location to get
Right.
cheaper rent.
Right.
So they're like, well, what do we do? And then on the other end of it, you have the people saying, well, if these old people will just move out of their houses, we'd have
And
more.
they need to, as a baby boomer, I need to move on, right? I'm ready, right? and
Yeah.
and and that's about to come. We're going to be surprised how many of those houses are going to, in the next few years, will start coming on the market, and people start taking advantage on alternatives that they have out there.
Yeah. Yeah. I mean, and honestly, I'm like, I mean, we moved into a bigger house, which Jeremy was like, what are you thinking? Why are you, but
Right.
he didn't want to be near people. I wanted my bathroom. I don't care about kitchens because I don't like to cook, but I wanted this bathroom and that's what I was looking for was a
Sure.
bathroom
Sure.
and it had a closet with a skylight, a walk-in
Oh,
closet with
wow. Yeah.
skylight. So I'm
Yeah.
like,
Yeah.
okay, this is the right house.
Right.
Well, it's a two-story,
Yeah.
and we're not going to be getting younger. So
Right.
stairs are going to become an issue
Right.
at, they already kind of are. I'm already like, I'm tired of climbing these stairs.
Right. Yeah.
But we're away from people.
Yeah.
We have great neighbors.
Yeah.
We have 4 acres, so it does get a little bit
Okay.
and, the summer mowing is like, we gotta mow
Yeah,
again.
see,
It was
that's
just
something
snow.
I don't want a bigger lot than I have because I don't want to have to mow it. If
Yeah,
it takes
but,
me all day to mow the lawn, I don't wanna do
I
that.
know, and so I've been thinking, I'm like, okay, how could we downsize? And,
Right.
we were actually just talking the other day about, well, we have 4 acres. If we could figure out, how to put a container home and build a little container home on our property,
Yeah.
we
Yeah.
could rent the container home Airbnb the container home, maybe we could just move into the container home and rent our own house. So I start thinking about that. I mean, we also have a full basement that we could renovate and, put renters in. I think the
Right. I mean,
functionality of the house is
you could
difficult.
Airbnb, you could be like a container home and Airbnb it, or maybe
Yeah,
you live in there part time and Airbnb it and have a container home in Florida.
right.
There's a
Yeah,
lot of different. I've come up with a lot of different alternatives
we've thought about it
and
because we
written all those
really are
down.
looking at
Yeah,
maybe RV life, and being able to,
sure.
just load up in the RV. But it's like you still want to have a home base.
Right. No,
Um,
and you do. You need. I have an RV. I do, and I go all over with it. But you want to have a home base. You do.
yeah. And
I
and
agree.
so there are all sorts of options. It's kind of like thinking through what the best option is. But those alternatives, really could move towards also solving some of the housing issues that we're having.
Yes. Yes. That's
Um,
why I want to put these seminars on is to start. And I'm going to be rolling this out to like not only realtors but financial planners and accountants
mhm.
so they can kind of help get the word out to clients that they do have alternatives out
Yeah. Well, if you need help, call me.
there. Okay. All right. That would be great. Okay. All
So
right. All right.
I'm an introvert, but I actually love presenting things, especially if they're
I'm
helpful to
not.
people.
I'm an extrovert, so I love yeah, in front of yeah, in
Um,
front of from the camera to out in front of, as people every day. Yep.
yeah, well, most people don't believe me when I say that I'm an introvert. They're like,
Yeah.
"Really?" But yeah, I've had to, I've learned, I've learned how to manage and learned how to push
Right.
myself past those boundaries and all. So,
Right.
yeah, but I am definitely still an introvert. But when it's something that I'm passionate about and,
Right.
housing,
It makes it easier. It does. Yeah.
yeah, and housing people, I'm passionate about. It comes from my world in mental health, and
Oh yeah.
honestly, for
Right.
a long time, it was I when I was young and we first were starting out, I didn't understand why we had a person that focused only on housing programs. It was like, well, that's kind of weird. But now I'm like, oh my God, we needed
Right.
five of those people,
We do.
not
We
just
do.
one, because it was all about, trying to create programs and connections to resources and other
Right.
like the helping programs or the case management programs that could help keep people housed or get them housed when they were homeless or and it was a tremendous amount of work. And so I have a new view on it. And I also have the view from the nonprofit world and the state government world
Oh yeah.
versus now in the
Right.
the for-profit world.
Right.
And figuring out how to marry those two is a
Yeah.
little perplexing, you know?
Yeah. No, it is. They are two different worlds.
Yeah,
I've been an entrepreneur all my life and been pretty self-employed all my life. So
yeah. Well, all right. Well, is I so last I know we're about 3 minutes over. I try to keep these to an hour or under. How do people get into contact with you?
So calling me is the best way to do it. They can also email me. My easiest email, I have several, but my easiest one is just my name, Ronald Ireland at Yahoo. And so call me. Absolutely. I try and answer my phone all the time. Me. You're probably going to get a better chance to call me. But if you want to email me, you can text me. So text me on the number that's on the screen there. That's a great number. Email me at Ronald Ireland at Yahoo or text me and I'll try and get back with you.
All right. We'll put that did I spell it right? I
Yep.
did.
Yeah.
Put that back out there so folks can see it. Um, and I appreciate you very much. I think this has been great information, and hopefully we can get it
Good.
out in front of people and be able to, not just drive you some business, but also help some people,
Yeah,
get
that's
into some of
really, yeah,
these
that's why
houses.
I do it today is, really help make a difference in people's lives.
Yeah. All right. Well, thank you very much, and I'm sure I will see you soon.
I will see you soon. All right.
All right.
Thanks,
Bye.
Angel. Uh-huh. Bye-bye.